Welcome to our 1-hour meeting of the minds about money. Your money. This is InvestTalk, made possible today and every day by KPP Financial. It's about managing risk while looking for profits, putting the money you worked for to work for you. And now, here's registered investment advisor Steve Peasley.
Welcome to InvestTalk, everybody. This is the 1 hour we use every day to catch up with the money market, the money marketplace out there, the stock market, what's going on with real estate, anything to do with money. That's what this hour is for. We all have a stake in it. Whether you own a house, you have a 401k, IRA, whatever, we all have a stake in our stock market, our wealth building. It's very important, and that's what I'd like to talk about. Our main focus, of course, is always retirement, because that's our goal. Everybody's shooting for that goal of maybe not stop working, but at least making a goal of having an easier time as you get older. Live in a comfortable lifestyle that you've gotten accustomed to. And that means you got to grow the money. You have to get there. You have to have enough money to enjoy that. And you have all kinds of battles to fight before you get there. And because it's this time every week, we really want, I want to mention, we always come out with our e-newsletter. Comes out weekly. It's a summary of what's happening in the marketplace. You know, it gives you a couple stock ideas. Our e-newsletter comes out every week. Every week. So it's called the KPP Premium Newsletter. And if you're interested, go to investtalk.com. You can sign up for it. And we said about 1 to 2 months ago, right after the Bear Stearns news came out, where remember when J.P. Morgan saved Bear Stearns with the help of the Fed? And we said this may be the end of it. It is time to start thinking about buying. This is the end of the issue of the subprime, of the liquidity issue. Not that it was over. We didn't say that. We're saying that the stock market may view this as the premium, the apex of the downfall. And then you have to, if that is true, then we have to start buying. We said that in the East newsletter. The following week, we said you need to be buying this market. Second or third week after that, you need to be fully invested. That's what the newsletter will do for you. It will help you decide when you should be in or out of the market. Now, of course, since then, that has been true. It has been the time you should have been buying. It has been the time that you cut back on your cash levels and putting it back in the market. Remember this, it's very true. When there's maximum fear, maximum blood in the streets, that's when you start buying. It's very difficult, but you have to do it. You could be wrong. It may not be the absolute bottom. That's true. But your odds of buying things at very good prices are very high when there's blood in the streets, when everybody thinks and everything's falling apart. Just the opposite true, too. Remember 1999? Everybody thought the stock market was going to go to the moon. Everything was wonderful, just great. Early 2000, everything was just great. Buy. Well, guess what happened? That's not true. So be very, very careful. 888-99-CHART is our number. You can be part of the program if you want. 888-992-4278. If you're interested in our newsletter, all you do is go to investtalk.com and you can sign up there. It's very good. If you want to make a call right now, lines are open. We're going to talk about the market in a couple of minutes. But first, let's go to Sid in Fremont. Hi, Sid. How you doing?
Hey, happy Friday.
Happy Friday to you.
All right. Yesterday, you talked with someone about a fund program that combined straddling, both short and long. Mm-hmm. Do you remember that?
I know there's a mutual fund that does that, yes.
Right. Is it possible for someone with ETFs to have both a short and a long and achieve the same effect based on expenses and everything else?
I don't know if there's an actual short that goes both short, ETF that goes both short and long inside the ETF. But there are ETFs that go short and ETFs to go long,
That's what I'm saying.
yes,
Right.
you can straddle the market using ETFs by doing that.
Right.
Yes.
And the essential expense ratio works out within the same, and
Yeah,
maybe even better.
yeah, it might even be a little bit better because ETFs generally charge about 0.4% per year. 0.4%. It's usually very inexpensive
Right.
compared to a mutual fund
Right.
because they're not actively managed, most of them. But if you actively manage by short and long, yeah, that you can do that.
Right.
Yes.
Now, the next question, do the shorts and the longs have to be a mirror image of each other? I don't think so.
No, and Sid, you don't really want it to be. You see, you can short, like if you think the large caps are going to move faster up than the short caps move up or down, you can like short one and long the other, and even though you're straddling, you can actually make money because if one does move up faster than the other one moves up,
Right.
then you'll make a little bit of money as you're being extremely cautious.
Right.
There's nothing wrong with that philosophy. I wouldn't use it right today, but there's nothing wrong with that in turbulent times. There's certainly nothing wrong with that.
Well, why wouldn't you use it right now? Because it seems like what you were just saying. There might, and I'm not a bear or a bull, but I mean, it seems
I'm
tempting.
more bullish right now than bearish. I would be more long than short. I wouldn't be shorting at this point.
Right.
we've
No, I agree.
Okay.
Very
Sid, appreciate
good. Well,
the call.
thanks, boss. Have
Thank
a good
you
weekend.
You too. Thanks, Sid. Now it's time for you to be part of the program. It's your turn to talk. I don't want to talk all the time. Me and Sid have great conversations, but maybe you should get in on the conversation. What's your investing question? Call 888-99-CHART. You can call right now. If you're ready, we are too. 888-992-4278.
We're glad you're with us today for InvestTalk. There are 3 ways we serve our listeners. First, we answer your questions on the air live with access to our 24-hour listener line and via email at 888-99chart@gmail.com. 2, investtalk.com with financial information and perspective. And 3, with individual portfolio checkups on the phone or at one of several Northern and Southern California offices. And thanks for listening to InvestTalk today.
888-99-CHART, everybody. The listener line number is ready for you anytime, 24 hours a day. You can get through. Here's a call from Paul in the Bay Area.
My question is about 3M. I was hoping you could speak about it a little bit or maybe give me an email response. I own a healthy position in it, and it seems to go down, and I'm wondering why. And I can read all the analyst reports, but none of them really get to the meat of the subject. So 3M is the company, and I was just hoping for an explanation for its decline lately. Thank you very much. And I'm listening to you on the radio, but I don't know what station. I'm driving, and you're on the radio. Thanks. Bye-bye.
Well, 3M, everybody knows who 3M is. A great company, a very, very strong company. Earnings go up every year, it seems like. Very consistent, very safe. The company is not going to go away. And provides industrial tape and adhesive, office materials, medical supplies, surveillance and communication products. It's very diverse. And if you want to know the problem with it, really there is no problem with it other than it's a very slow grower. It grows from 6 to 10% per year, has forever, and it's just recently, over the last year or so, it's gotten very inexpensive, much like much of the stock market has. Its current PE is 15. Based on next year's earnings, it's going to be 13.5 PE. Its 5-year PE range is 14 to 27, so it's at the very low of the range. Has a very good return on equity. 34%. The bad part, the GPE, the growth to the PE ratio, is very low, 0.44. I like to see it 2 or higher. That's our rules. Why is it so low? Well, because the growth is low. It's not like it's not an expensive stock. It's not an expensive stock.